I'll pass it over to you.
Yeah, that's great.
This meeting is being recorded.
Hey, good morning, everyone. Welcome to Financial Literacy Week, powered by U Mortgage. Welcome to our first session of the day. So this session here, we have Mike from Mass Mutual. He's going to be talking about the financial concerns of business owners. It is a great privilege to have him here with us today. So I'm going to pass it over to Mike to kick things off for us.
Awesome. Thank you, Ryan. I appreciate it. And on the call is Stacy Kingsbury, who is an advisor on my team as well. So just want to give everyone a quick introduction. Who are we? What is it that we do? Kind of what maybe gives us some credibility to be teaching you about some of this stuff. I think that's always important to know. And then our agenda for today. And really, what we wanted to discuss today, financial concerns of business owners. And what we find is that business owners typically are really good at their business. They may know it really well. So I'm thinking about some clients. One of them is a tattoo artist. He's fantastic at it. One is, a plumber or an electrician, car sales, right? But oftentimes business owners lack business skills, when it comes to managing their finances, kind of running expenses, doing payroll, hiring staff, training staff, keeping people motivated, retirement benefits, all the like. So we wanted to spend some time mainly on that in terms of, I'm not going to teach you how to run your business, but some tips that we see and certainly for the financial side. So again, my name is Michael Melito. Stacy and I are financial planners with a firm called Mass Mutual Greater Philadelphia. What we really focus on, to give you guys an idea of our industry, sometimes people hear financial planner, financial advisor, and they kind of loop everything into one. In our industry, there's advisors that are very, I would say, transactional, where it might be someone that you go to buy some stocks or invest some money. Some might be more like on the insurance side, where they can kind of help you get your homeowner's insurance, car insurance, things like that. Where we kind of sit is, I always kind of say, like up top, and as financial planners, it's more about helping you make good financial decisions consistently in all areas of your life, whether it comes to managing, money in the bank, managing debt, your spending, saving for the future, retirement. How do you invest in the right ways? How do you make good decisions no matter what? And that's really, we like to think of ourselves as coaches, right? We're kind of your coach. We're the architect of your personal finances is really what we like to be. That being said, I think we're a pretty good fit to teach this class because we're business owners. So I've been doing this 10 years. One of our partners, Mike, has been doing this 35 years. We run a business. So I've hired hired and interviewed staff. I've fired staff. I've offered bonus programs, incentive programs, employee benefits. I've done exit interviews. I've talked to clients. A lot of stuff that we're going to talk about today is from our own personal experience, and then from experience that we deal with on a daily basis with our clients that run their own businesses, which is really important. All right, Stacy, did I miss anything
Yeah,
on
I think you got
who
it
we
all.
are and today? So we've got a PowerPoint to go through here, and I always promise when I'm running some sort of presentation or class like this is we try not to use the PowerPoint too much. So we've got some slides to go through, but we really want this to be interactive. So we're going to go through some of these slides. At the end, we're going to open it up. The majority of the time, we really want to spend in kind of question and answer. So if you have a question, put it in the chat box. And at the end, we're going to open it up to questions to try to really dig into the stuff that's on your minds. So let's start. And again, I always say when you're running a business, usually you know it and you know it better than most, but that's one side of it. You have to understand how to run it and how to do this the right way. So where we typically start with business owners is you got to have a written business plan, right? This has got to be written down. You've got to have a vision statement. You have to have an analysis. SWOT analysis is what you learn probably in business school. It's a real thing. And I used to roll my eyes when I would hear it in school, and then I get out and you have to have it. And this is something that we do on a quarterly basis with our own business, where we're redoing our vision, looking at our SWOT. How do we continue to improve? That's one. And you gotta kind of make sure you're all rowing the boat in the same direction in your business and on your team. Who are going to be your key players? I would say your business, your advocates. Who are the key players? Whether that's employees, whether that's customers, whether that's going to be people that are going to help you find customers. Who are those key people, and have you identified them? And then lastly here, as you start your business, the joke that we always say when someone starts their business is the day they start thinking about how to get out of business. And you have to go through that. So as you're starting the business and it's becoming successful, you got to think about who your successor is going to be. If you don't have a successor, there's not a lot of value to your business later on. If you want to get rid of it and you go to sell it, it's not as valuable as if you had a successor identified and you can really work through a plan at that point. And frankly, it makes you more attractive to customers. As you get older, they're going to say, well, what's this business going to look like if you're not here anymore? And they want to know that. That's certainly a key thing in our business. So let's talk about the finances behind your business. The businesses that we see, and I can tell before I even meet them, we ask clients to send over documents prior. And one thing we ask for is a cash flow statement. And that shows us where their money's going. The people that know that, I already know before that call, I know they're in a better spot than most. So knowing where your money is going, what your income is looking like, how long it takes you to get paid by your customers, and then where that money is headed. If you've got a really good feeling on that, you're going to be in a better spot. I can tell right away when a client says, yeah, my expenses are kind of like this, and they don't know the exact number. I know that there's some holes and money's probably leaking out somewhere within their business. Having an emergency fund is crucial. We learned this the hard way in 2020 and really throughout the pandemic. So I get nervous whenever I see an individual or frankly a business that at the end of the month, they're spending all their money that's coming in and they don't have a backup plan. You have to have a backup plan. Again, business or just an individual, having money on the sidelines, and I recommend in a savings account, not in an investment account, that's completely safe and accessible. So a good rule of thumb, I would say, as an individual, it's probably 3 to 6 months of expenses. As a business owner, at least 6 months of your expenses, at least 6 months, if not 12 months of your expenses, I'd like for you to have in a savings account for the business. So you can pay either yourself, you can pay your bills, you can pay your staff if revenue is not coming in, which is key. Having a good credit rating, it seems pretty obvious and clear why you'd want that. But as your business grows and you want it to I would say scale and get really profitable, you're going to have to grow. And in most cases that involves debt and borrowing money to either buy a building, where a lot of our clients, that's kind of the next step after they rent, they try to buy, or get a second or third location for their business, or they maybe need some better equipment that's going to help them do things more efficiently. Oftentimes, at some point, it's inevitable you're going to have to get some loans. So having good credit, along with a business plan, along with all those financial statements, is going to be crucial. Having a budget. So for your business going into every year, I would tell you, if not every quarter, you should have a budget. Now, this is different than a cash flow statement. A cash flow statement is where it's actually going and where it went. A budget is where you're going to allocate your dollars. So, how much are you going to allocate towards salary for employees? How much is going to be training? How much is going to be celebration, right? Either for yourself or your employees to kind of keep everyone engaged. How much for marketing? It's clear you have to have these things mapped out, because different opportunities are going to pop up throughout the year for, whether it's marketing again, or finding new clients, or a new kind of venture within your business. You have to know what you can and cannot spend. Oftentimes we see business owners, they're always writing checks for different things and not really adding them up. So having a clear budget coming into each year, each quarter is key. Your expenses, again, you have to have a good handle on this. And know what they are. You can't think in round numbers. You got to know exact, so that you know exactly what's going out on a monthly basis. Making it easier for customers to pay you. I can't tell you how important this is. I've seen businesses all over improve. Personally, we've done this where we've expanded where people can actually pay for our services for financial planning with credit cards. That was an incredible improvement. We also hold seminars and workshops. We're able to hold credit cards. I think our attendance doubled. So just by that. Now, but think about, there's Venmo now, there's Apple Pay, there's all different ways. The easier you can make it for a client to pay you, the better. Now, this is a cost from a business standpoint, but so is time. If it takes your clients longer to pay you, that's hurting your business. That's really hurting your business. All right, keeping customers happy. So again, a little bit off the financial side here, but these are just some best practices that we've seen over the years. Get good feedback. Talk to your clients. I often recommend you should have kind of like a board of directors for your business, and it's great to have either business partners on there, people that you kind of share business and share clients with, and some of your best clients. I love to have some of our best clients sit kind of on our board where I ask them for feedback. I'm asking them about the experience, what was good, maybe what we can improve on. Same thing as customers leave you. I would tell you that's a great practice. And if a customer leaves you for some reason, reach out to them and say, hey, I wish I could have fixed it. What was the reason that you left? I'd like to improve for the future. You might get them back at some point by doing that. I think it's a great gesture, and it's gonna really help you learn. The middle point here, I'm assuming if you're running a business and you have a team and you have employees, something that we love to implement too is this first to touch rule. So a customer emails the team with a question. Now you should have every staff member knows what their roles are, but if one person receives it, the first to touch it, whoever touches it takes care of it, right? If it's something minor. If it's something they can't handle, they got to get it to somebody else. But instead of saying, hey, okay, Mike gets the email, but Mike kind of says, well, Stacy really handles that. Give a response, and maybe you CC that team member in. So first to touch rule, whoever gets it has to move it along and make sure that the customer gets taken care of. Setting productivity and benchmark goals and internal processes. So I'm an avid reader, especially when it comes to business and personal development. A good book that I love to recommend, it's a book called Can't Hurt Me by David Goggins. That's a good one to write down and maybe read later. David talks about there's another good book too I'll go through, but he has a line in the book where he says, if you're not getting better, you're getting worse. You're not getting better, you're getting worse. Well, how do you know if you're getting better or not? Setting benchmarks, setting performance indicators, benchmarks. That's how you're going to continue to know if you're growing or not, which is really key. Have your processes. Everyone's got to know their process, and that's got to be documented, which we're going to talk about in a second. Helping your team do their job. So oftentimes as your business grows, you're going to hire employees. Some of you have probably already done that at this point. Where we see a lot of wasted money and time is when employees are showing up and they don't know what they're supposed to do or how they're supposed to do it. So good rule of thumb that I learned a decade ago was when you hire someone, you want to show them how you do it, have them watch you do it, and then you watch them do it and give them feedback. So you show them, have them watch you do it with a client, you watch them do it, and then give them feedback. And any task that comes up is how we do that. Another thing I would say is as a client develops their own process, I'm sorry, as a staff member or team member develops a process, have them document it. Have them document it because they might leave at some point. They might take another job for whatever reason, and you're gonna have to hire somebody else. Well, think about it takes a long time to get someone trained and going, and you might not know all the ins and outs of that process. So have your staff document how they do and how they do what they do. So then that's almost like your training manual moving forward. So that's one of the best advice I've gotten throughout the years. Give your team autonomy. So when it comes to your staff, again, I had a business coach, which I really recommend if you're a business owner. Recommendation I got years ago was, Mike, no one's ever going to do it as good as you. I had a lot of problems delegating things to other people. And most business owners have the same problems, right? You got to this point because you were good at something. And you may want everything done just as you do it. You have to let go. You have to give your team and staff autonomy. Again, you're going to show them how you'd like it to go, but then you got to let it go. It's never going to be as good as you are going to do it, but that's not the most time efficient way and cost effective way to do it. Shared sense of ownership. Again, you want to build goals. Your team should know where the business is headed. Your team should be tied into that. We're big believers in paying bonuses for I would say things that the team can control, not necessarily profit for the business. I see a lot of companies go that way where a client says, yeah, I get a bonus at the end of the year based on the company's performance. And they get frustrated because they may do their job really well, but the company doesn't perform well. Is that their fault? No. So I think again, when you're running a small business, incentivize the employees, but score things that they can control, and think about what are the key parts of their job that they can control. That's how compensation, in my opinion, should be tied. All right. Now this is more the financial topics here. So as we wrap up, there's a big problem right now in our country with, I would say, retaining and hiring good employees. That's the number one thing we hear from business owners right now in terms of the problems that they're having. The great resignation is here. It's still going. A lot of people are changing jobs for various reasons. So our clients, the business owners, always want to know, how do I keep them? How do I keep them? Well, there's ways to offer benefits that can make you attractive, aside from all those other things I mentioned, between creating a good culture, helping them feel empowered along the way. But as a business owner, there are things that you should probably be offering to make yourself competitive. So what are some of those things? Good benefits and insurance options is key. Retirement plans. There's a study done. I believe it was Fidelity years back, and they looked at really the financial aspect to a business when they help clients be healthier and when they help clients save for retirement, the business is better off. Well, why? If your employees cannot retire, they're going to continue to work. So a big part of this was the employees would get frustrated because they were having money problems, and that's no good. That carries over to their work. The second is if you're helping them with health insurance, certainly, the older they get, the more that costs you. So there's a big incentive for the business to make sure their employees are financially solvent and in a good spot so they can retire, and that they're not on your medical insurance bill forever. And then you can get newer employees in there that can kind of fill and probably at a cheaper cost. So there's a lot of benefits for bucking up, contributing for benefits and retirement plans for your employees. Last thing there, helping employees make better decisions. We've had a lot of businesses hire us to do personal financial planning for their employees. Again, as their employees feel more confident in their own financial lives, they're not going to be constantly looking for another job to make a few extra dollars, right? And that's been the case. The businesses that invest in their employees, they make sure that they're financially educated, which is, if that's probably why everyone's on this call today, is that you wanted to get more educated. But if you've got employees, I'm sure they have the same desire, which is really key. So That's an enormous benefit that's often overlooked. So what are the typical benefits that we recommend people are offering? So obviously health insurance, but I would say quality health insurance. And again, that depends on your size, but try not to be too cheap on that. You want to help them out, give them a wide array of offerings. Life insurance. Often when we meet people for the first time, the only life insurance they have is through their company. Now, that's just it's a sad statistic, really, because when people pass away, sometimes we get the call after someone passes away and I'm sitting there with a widow or a widower, and it's, well, what life insurance did they have? And sometimes it's not much. And often cases, the only thing you have was at work. But I've also been there where the company doesn't offer anything. So by offering this type of benefit, you might be what saves that family at some point. That's incredibly empowering. You might be what saves that family by offering this type of benefit. It's probably going to be the only thing they ever buy, which isn't a good idea, but you might be the way to help. Disability insurance, another one. Short-term disability usually is if someone's out for 2 weeks up to 90 days. Long-term is past that. Why is that a good thing to have? One, it makes it attractive. Again, most people, I think, don't really pay attention, but some people pay attention to those benefits. But if someone's sick or hurt, it gets them taken care of. And then you're not in a spot where you got to think about, okay, can you afford to continue to pay that person? Or can you not? Because you'd probably be within your legal rights to not have to pay them if they're sick and they can't show up for work. So offering these benefits, it helps you. And then obviously it helps your employee and your staff. We've seen this last bullet point here pretty frequently now. Student loan repayment match. Some businesses are actually offering a 401k match, but then they're offering student loan repayment, where they'll say, okay, if you pay back $300 on your student loans, we'll give you a match on that. So if you're looking to hire younger employees that are more likely going to have student loans, that could be a fantastic benefit. They may not care too much about retirement planning, but they want to get those student loans done. So think about your audience and who you're trying to hire as a business. Retirement planning. So we often get calls from business owners just about retirement planning because they know previously they had a 401k, or maybe their parents had a pension in a 401k, and they start to realize, hey, this is great running my business, but I don't have any retirement plan set up. So if you're a business owner, you've got some options. So just to run through a couple of these, the first thing is what's called a traditional IRA. So a traditional IRA is really anyone can use. This is not just a business owner, but it's beneficial for business owners because of the tax deduction. So you can put up to $6,000 a year into a traditional IRA. Also, a Roth IRA falls into this as well. These are on the personal side. $6,000 a year can go into an IRA, $7,000 if you're over 50. And then for business owners, typically, usually they're choosing the traditional side, which gives you a tax deduction. So you can save $6,000. It comes off of your taxes. We'll be talking later on today on a webinar about taxes. But that's a deduction that you can get as a business owner, which is important. And then $6,000 a year can get invested for your future. Something called a SEP IRA. So again, this is for a business that usually is just one person that's running the business. Maybe it's 2 or 3 partners, but typically under 10 employees is going to be a SEP IRA. And the difference between a SEP and a traditional is the SEP allows you to save up to 25% of your gross income after expenses as the business owner, up to, I think it's up to $59,000 this year for 2022, whichever's lower. So if you made $100,000, you could put in $25,000 into this account for retirement purposes. So you have a much higher threshold than the traditional IRA. But again, it's only for businesses, really under 10 employees. Typically, it's 2 or 3 is kind of the sweet spot. Or if it's just you that's running the business. So that's an incredibly good way to save for retirement and to get a nice tax deduction. Next, there's something called a solo 401k. So we've all heard of 401k plans. You can actually open one up just for as little as one person. We call this a solo 401k plan. Similar to the SEP IRA, it's going to allow you to save much more than a traditional IRA. You can put up to, again, that $59,000 limit. And really, you can put 100% of your income into it if you wanted to. Never happens, but you can. The downside on that is once you have more than one employee, it doesn't work. So if you have a partner, if you hire someone solo, is not going to work at that point. A simple IRA. Now, simple IRA, I would say, is used the most when there's a business owner and then some staff, where they hire maybe one or two or three people. There's a few business owners, a few partners that are in the mix. A simple IRA allows you to put up to $13,500 per year as the business owner. Any employee can contribute as well, and you can kind of lay out what makes them eligible, typically a certain amount of hours worked per year. So now your employees are happy because they can save into something, right? So there's no 401k. That's usually the first question that people will bring up. So this is not a 401k, but it's a similar account, allows them to save for retirement. And then you can also put a match into the plan. Typically, the match is going to be about 3% of salary for what they're being paid. So the simple is a way that you can save as the business owner and that your employees can save. Lastly is you can open up a 401k plan, just like most businesses have. The downside to a 401k plan is it comes with some forms that need to be filed with the IRS, and there's some costs. So typically, we don't see businesses under 15, 20 employees that are doing a 401k plan. That's usually where the simple IRA is used. But if you're running a business that's larger than that, 401k can be a great place to do it. There's more options. There's a higher amount employees can put into $19,500 per year. Sorry, $20,500 now for this year, and then an extra $6,500 if they're over 50. So there's higher contribution limits on a 401k. All right, what are some other documents that you want to think about around your business from a legal standpoint and financial standpoint? I believe every business should have an operating agreement, particularly if it's a partnership. So if it's more than one business owner, a partnership, whether it's 2 partners or 10 partners, the operating agreement is going to spell out who is doing what and what everyone's role is in this business. Along with that, we often recommend a buy-sell agreement. Again, these should be drafted up by attorneys. A buy-sell agreement is going to define some key things, and I listed them there. We always say these are the 4 Ds. What happens in the event for one of the partners with death, disability, divorce, or disinterest? Death is this: what if one of the partners passes away? Then what? Well, if you don't have anything spelled out, the family of that partner technically now owns an interest in the business. So either that person's spouse, that person's children, whoever that person's estate is. Well, you may really like your partner in the business. You may or may not like their spouse, or their spouse may have no interest in running that business, right? And they would rather just sell. But how are they going to get bought out if the business doesn't have enough money to buy out the spouse of the deceased partner? So that we've seen just complete disasters with business owners where a partner passes away and they don't have these agreements. Next is disability. What if a partner gets sick and they can't work anymore? Well, how long is the business going to continue to pay them, right? If they're not doing anything and they can't work because they're sick. So there should be, a time frame of, a year. Typically, I would say 2 years is the time frame on this. And if someone's out for 2 years, there should trigger an event where there's going to be a purchase of that person's ownership. And how's that going to happen? Divorce. So what if one of the partners gets divorced? Well, guess what? Depending on the state, that spouse may be entitled to part of that business. You probably see these on like TV shows. You have that spelled out in the operating agreement. What's the protocol? And if one of the partners gets divorced, what happens? How do we deal with that person's, ex-spouse and their now ownership in the business? And then disinterest. What if someone just wants to quit or leave the business? They want to retire. They want to do something else. So again, there should be a stated, how do you come up with the value of the business at that time? Are they going to get paid out all at once for their ownership? Is it over, a time period? Is there a non-compete clause where they can't go open up a business, in the same industry? What does that look like? All these things need to be spelled out in the operating agreement and within that, the buy-sell agreement. Beyond that, you've got to have ways to fund it. So, if a partner passes away and that partner's family's owed $1 million because of the business, that's great. But how are you going to get that $1 million? So then you got to look at funding it. Typically insurance policies, life insurance policies, disability insurance policies, different investment accounts. You got to have a way to actually buy that partner out. Typically that's done with insurance. All right, it's question time. So we do have a QR code on here. So part of our commitment, again, we're excited to be doing these classes. We want to offer kind of basically a free consultation for anybody that's on the call that wants to chat with us, just to ask kind of more personal questions. If you have an interest of some of the stuff that we talked about, we love to help out. And so scan the QR code. It's going to bring you to our calendar where you can sign up for a time slot that's free. And then we'd love to chat with you, hear about what you thought about the class, and then really what we can help with, if there's further questions that you have. We do that consultation, for free. You're not going to get a bill from that. If you think you might need a financial planner at that point, we can certainly talk about it. But this is kind of part of the class and the webinar. We're huge believers in financial literacy, so we wanted to kind of extend our time. So as we ask questions, certainly go on there and scan the code, and it'll bring you right to our schedule. All right, Ryan, I think you're probably monitoring questions here. So we love to open it up for questions and conversation on the class.
Yeah, thanks, Mike. Oh, getting feedback. All right, let's try that again. Yeah, no feedback there. Sorry about that for a second. Yeah, we did get a few questions come our way. One of the first questions, when you brought up like having that security of like maybe like 12 months in like cash reserves, is there any other options for like business owners to deal with, especially the question asked was like a volatile world, like we've had COVID, we've had geopolitical issues that can like affect issues like businesses, and like COVID shut down certain businesses for 6-8 months. Like, is there any other ways business owners can kind of protect themselves from those really kind of unforeseen events?
When COVID broke out.
Oh no, wait, hold on. Sorry, you're good.
Good. When COVID started, the government kind of rolled out, programs, right? So we had the PPP loans for businesses that came out. Other than that, and what I would say is when they did roll out those programs, the businesses that had their finances all together were the ones that got it first. So having that statement of cash flow, having your taxes done, having all your expenses buttoned up was what gave people the ability to get approved fast and get kind of that limited funding. But no, besides that, I mean, that's why we're big advocates of having an emergency reserve. We don't know. So I've had clients, again, I mentioned a tattoo artist where they were shut down. Really, no one was really allowed to go get a tattoo when you got to be, have someone literally touching you to do that. So restaurants and bar owners in the area. So really having those cash reserves is key, and having the ability to survive is enormous. Obviously we can hope that we get the government help, but we can't rely on it. No, we can't rely on it for sure. That was a good question.
Yeah, thanks for that response, Mike. Another question I did see come in, you talked about like, making ease of access to payment methods. You talked about like credit cards and things. Have you seen any other like alternate uses or things that are kind of like emerging or new that can help business owners like attract people to like pay for their services? Especially, again, the question was like things are shifting more online, kind of digital sphere with COVID again, less touch. Like, have you seen anything pop up?
Not anything that's like super innovative, but I would tell you, we're staring at this QR code. I've seen it personally with either businesses or getting bills myself. It's always nice when they send you a bill and there's a QR code, you scan it and you can just pay it right there. So just the easier you can make it. We all have cell phones with us like at all times. So that's usually the key. If you could send a bill, attach it to a QR code for your client, they can pay it right away. It doesn't get much easier than that. Allowing for kind of automatic payments, I would say as well. The more you can make things automatic for your clients, the more likely they are to continue to pay. So just having options, meet them where they are is really the key.
Yeah, that's really good. Thanks again. And one more question I saw come in. Looking at, you talked about some of the, if you're like single business, like somebody like a sole proprietorship or versus a partnership, like what are like some of the really like pros and cons of being like in those situations? Like, does one outweigh the other?
Well, look, I'm a believer in a team, right? So, I'm a part of a team. Stacy's been on our team for a couple of years now. I like partnerships where you've got a couple people to collaborate. Doesn't work for everybody though. So that kind of personal preference if you're going to have a partner to go at it versus on your own. Now, from a financial standpoint, again, I think there's ability there when you've got partners to absorb some risk, right? So if I'm out and I'm sick, or I'm going through some things and I can't perform at my best, well, if I have a partner, that kind of helps take care of each other in that sense. From a tax standpoint, as you continue to grow, that's where you really want to consult with CPAs and estate professionals and attorneys. I always want my clients to have a team of professionals around them. As your business grows and you've got employees, that's where you start to look at, okay, should we be kind of a pass-through entity, which is what most small businesses are when it's just them, versus more of a C corp, where really it's the business itself is there, and you're kind of owner but employee of the business. So there were some tax benefits to doing that, and certainly some liability benefits to doing that. So you always want to continue to ask your tax professionals and attorneys that are on your team to see, okay, what's going to be the benefit for me in my particular business to maybe change our structure.
That's really good. Thanks, Mike. And a couple more questions actually came our way. So,
Good.
looking at, having this service like you, Mike, and Stacey is very valuable for a business owner. Like, what kind of costs does it like associate with this? Like, they're
Yeah.
thinking like, business owner money might be a little tight the first year, but the service is good. Like, how much is it going to kind of cost me?
Yeah, so that really depends. Really depends on the business and what you're trying to accomplish. That could be anywhere $1,500 a year to 10,000. I would tell you, it really depends on the complexity. That would be more if you've got those questions. I would say scan the code, and we could kind of give you more individual advice on that. But someone like us in general, it's we've all different relationships with clients. So sometimes the client says, I need to hire you and I need you forever, right? So this is going to be something I'm going to pay for your services year in and year out. Sometimes a client, and we'll be honest, and we tell them too, like maybe you don't need us forever, but you need us right now to get things situated and get you moving in the right direction. And then maybe we'll cross paths in the future. So it really depends on the situation. And if it's going to be, worth everyone's time and money to do it.
That's good. Good advice. Scan that code. Get a little personalized advice for that. Will be.
Yeah, it's just I don't want every business is different, and yeah, so it's really tough to say.
Yeah, the last question I've seen for now come in is, someone like looking to start their own business and saying that they're a little scared of like starting their own business, that they have a house, things like that. Like, they're scared if the business fails, like what are they kind of liable for? Could they lose their house? Could they be out on the street kind of thing?
Um, it it depends on how they're starting that business. So again, that's situational, but I would say, look, first, if you're going to go out and do this, you want to have an emergency fund for yourself. I often get nervous when I see someone starting a business and they don't have much behind them in terms of cash savings and reserves. Because the business may take a little bit to be profitable. So make sure you're kind of secure before you do it, I would say. And then you want to know, right? So if you're taking out a loan to go start that business, well, if they might ask for collateral, so you want to take a look at that. What a lot of people will do is they'll talk to an attorney, they'll get an LLC or some sort of kind of legal entity for their business, and that's more for liability purposes. Where, okay, if I have an LLC, that's different than me, right? And if the LLC has a bank account, well, whatever's in the LLC would be liable. So it's a way to kind of separate, yourself and then the business, and make sure you're getting the proper insurances for your business as well in terms of, again, protection, business protection if something happens and someone's coming after you, want to make sure you've got some help and not doing it yourself.
So good legal advice and the proper insurance are key.
Yeah, I mean,
And an
it's
emergency
look, there's
plan.
cost to doing business, and
Yeah.
and it's doing it right. So talk to attorneys. Don't be afraid to do that. It's going to cost you some money, but it's probably going to save you a lot in the long run.
Right.
That's really good. Thanks, Mike and Stacy. So I'll let the audience stew on, a lot of great questions as they see if anything else pops up for us here at the moment. But is there any final remarks, Mike or Stacy, that you'd like to make?
Well, I hope this was helpful and you learned something from it. And we wish you, if anybody wants to share what type of business they're in, that would be helpful. I don't know if they wanted to add it into the chat.
Yeah. Feel free to throw that in the chat.
You can throw that in the chat and how long they've been in business.
Or maybe what you're interested in starting. If you're not a business owner and you came to the session thinking like, hey, this has been on the radar, I'm looking to maybe do something or have dreams or aspirations of being a business owner one day, maybe throw that in the chat too for us. What might you be on the radar or, in the pipelines or the dreams one day?
Right. There's a lot of aspects to think about and there's a lot of complexities to it all, but there's a lot of resources out there too, so. Handyman business, hard but fun journey. That's great. Congratulations. And where are you from? What? So I actually have a few. Oh, and Logan, you saw. Okay, great. Real estate mortgage. That's great. Okay, the real estate market, it's a place to be right now. I do.
Yeah. Go ahead. Sorry.
Oh yeah, you know, right?
Yeah, I bet the handyman business is booming right now with a lot of home ownership increasing, things like that. Like I imagine a lot of people picking up the phone and wanting work on their house. So
one unique thing I did see with a handyman, I have a client who's a handyman and he offers monthly check-ins for clients. They pay a flat fee and they get 2 hours a month for any of their projects, which I thought was a pretty unique thing. And especially for older people that might not be able to take care of their homes the way they used to. So Mike, I'm asking, what type of business people are in, and yeah, Zayden, that is a great idea with the handyman, because some people can't do what they used to be able to do, and this way you get a list of projects, and this handyman actually comes in for a couple hours a month, and it's a flat fee that they pay. So it's good for those of us that have older parents. It's nice to know that they have somebody looking out for their home and anything they need done. Okay.
yeah, we have Rama who does a broad variety. So he's doing real estate, mortgage loan officer, insurance producer, all across the time zones too. California, Pennsylvania, Texas. So you're hitting all the time zones there. There's some
Wow.
with that, but that's great. And then Alex shared appraisal and repurposing. So taking like a basement full of people with junk, turning into cat. That's great. I've seen actually a few TV shows on that. Like, yeah, people have just had like things in their basement that maybe it's from like the grandparents, antiques. Good way to like get some cash flow just from that.
That's great.
Awesome. So I got kicked out there. My internet, there's a little bit of weather going around me, so the connection was off a second.
Oh, good. I love all the sharing in the chat here
Yeah.
too. Also open, any final questions anyone would like to ask, you can throw them in our chat too. A few people messaged me directly in the Q&A as well. With the last few minutes we have here together. So if you have any other questions, definitely throw them in the chat. Definitely love the participation about like what business or even dreams, maybe what you want to do too. So keep those chats coming for the last few minutes here.
And definitely feel free to reach out to us at any time. We'd love to chat and have a conversation about your goals and what you're doing and how we can help.
Yeah, Mike, would you be able to throw up your QR code again, just in case?
Yeah, I was just trying to. I think you might have to give me permission again.
Oh, yeah, will do.
I got kicked out there a second.
Yes, you are now. There you go.
Yeah. So yeah, go on there and schedule some time. We'd love to chat with you, about your business and the finances, even if it's on the personal side too. It's important to ask for help, really.
Yeah.
So often we see people just trying to figure out themselves, and usually it doesn't work for the best. So get your hands up for sure.
Because you can get some good ideas. I mean, the handyman idea was pretty good. It sounds like. I hope you use it and have success with it.
Good. Any other questions flowing in?
I haven't seen any other questions flowing in, but just a reminder: sign up for, if you have further questions, sign up for a time with them. Scan that QR code, and get in contact about, even if it's dreams of you're trying to start a business, it's like you're in the works, but you're kind of stuck too, you get some help and things. But I'd like to thank Mike and Stacy for joining us for this session. First of all, this was an incredibly informative session. I hope everyone, this group, gained a lot from it. We're going to see Stacy back at a little bit later today. So we have 2 more sessions with them coming up. So our next one, Stacy's going to be talking about understanding debt, and that's going to be happening at 1 p.m. Eastern. So we look forward to seeing you that. And then we're back to back with at 2 p.m. talking about taxes, personal too. So it's that crunch time. We only have a few weeks left to get those taxes in. Really good topical session for that. So I'd like to thank you both again, Mike, Stacy, everyone who joined us today. Thank you. Any closing remarks from either of you before I wrap things up?
I just want to thank you for your participation, and hopefully we'll see you.
Yeah. Sign up for these other webinars coming up. Getting out of debt, understanding taxes are incredibly important. So we're excited to be doing it, and this is really our passion. So thanks for hanging out with us for 45 minutes, and kudos for everyone here for learning. It's just, the more you know, the better off you're going to be. So,
and thank you to U Mortgage for offering this. Thank you, Ryan.
100%.
Appreciate it.
Yeah, it's been a pleasure to host this. And thank you, everyone. We hope to see you back in just a little bit at 1 p.m. So we'll see you shortly. Take care.